A volatile day for the stock market. Moments from the closing bell at the New York Stock Exchange, the Dow is down more than 900 points, nearly 4%. ABC's Daria Albinger is following the markets with us. Daria?
You know, when this happened just a few days ago, less than a week ago, when the markets closed down 666 points, we were saying, is this the new normal? And the experts were saying, no, don't worry about it. It's going to pull back. It's going to correct itself. Well, now we're beginning to wonder if this is the normal.
Well, maybe for the foreseeable future. JJ Keenahan with TD Ameritrade is our good friend there and joins us as we await the closing bell. And JJ, couldn't help but overhear some of the traders as we near the closing bell who were yelling from the floor, just ring it already.
Yeah, you know, as we headed into the close here, the last 15 minutes, we've seen the sells come in kind of exponentially. So at one point to this, I don't think that we're going to see the volatility decrease over the next couple of weeks. After you have something like we had on Monday, it tends to take 2 to 3 weeks to work through the system. I think that this would be the short-term new normal until all this news works its way through the system.
The sharp sell-off today and in recent days was touched off by concerns over rising inflation, and that started with, ironically, some good economic news from the Labor Department, the good jobs report showing a bit of an increase in wages and a bit of an increase in hiring as well. And you can hear the applause, which is traditional at the New York Stock Exchange, but maybe perfunctory on a day like this, because the Dow, as we approach the closing bell, is down 4%, more than 1,000 points. The closing bell at the New York Stock Exchange will await the settle of the Dow, but it's down more than 4%, more than 1,000 points. JJ Keenahan, our good friend from TD Ameritrade, is with us. JJ, investors are weighing whether these sharp swings are something of a deeper correction or just a temporary blip. Which is it?
Well, I think this is part of the correction we talked about, you know, all through 17. When are we going to get the sell-off? 5 to 10%? I don't think any of us thought we'd get it in less than a week. But this is, I think there's been pent-up selling demand because nobody wanted to sell in 2017. So you're seeing, I believe, exponential selling because of that.
We saw the Dow drop nearly 1,200 points earlier. It came right back the next day. Here we are again, down more than 1,000 points as we await the settle following the closing bell. How does the equilibrium find itself?
Well, you know, as I said, hopefully over the next 2 to 3 weeks it will find itself, but I would expect to see up and down days until then. There's a repricing of every asset. It's not just stock. You're seeing crude oil sell off significantly. You know, we've seen the great sell-off in bonds over the last week. So what's happening right now is there's new valuations to be put to everything. It kind of means the ground is shaking underneath the market right now. That means volatility is going to stay high. What I would say the biggest thing the retail investor can do is say, if you pick this time to buy, that's fine, but have a time frame in mind. The longer your time frame, the less of this, quick volatility you're going to be exposed to. If it's for a quick hit, realize you're opening yourself up to more volatility.
All right, take the long-term view. Advice from JJ Keenahan, our good friend at TD Ameritrade. JJ, thank you. ABC's Daria Albinger is here as we look at a board from the New York Stock Exchange that shows the Dow down more than 1,000 points, more than 4%. And that really hit right in the closing minutes of trading.
Yes, it did. And actually, it hit just in the moments after the bell rang. And that has a lot of people wondering, are all of these companies doing as poorly as they appear to be? You look at the board, you see nothing but red. Now, most of the experts would say, no, they're not all doing that poorly. In fact, if you've looked at earnings, we've had some very encouraging earnings reports lately. But then again, when we were on the upswing, when we were seeing the Dow close, in these exponentially high numbers, you have to wonder, when I saw that green on the board, were they doing that well? The answer was probably no.
ABC's Daria Albinger following with us as the Dow Jones Industrial Average has closed down more than 1,000 points, more than 4%. It's not just the Dow, Daria. NASDAQ, S&P also fell today.
Yes, NASDAQ was down more than 100 points. And the thing to remember, the NASDAQ is a much smaller index. When you see it fall more than 100 points, you know that you are in trouble. The S&P, which a lot of people say is the index that you really should watch to see the health of the stock market, that was down more than 50 points. That is telling. This isn't good.
Well, not good for investors, certainly, but certainly an example, ironically, of an economy doing a little bit better. Companies are doing well. They are reporting strong earnings. earnings. The economic data is good, and that is what has people spooked about inflation and rising interest rates.
Absolutely. Today we saw a jobless claims report that it hit a 45-year low. I mean, we hadn't seen stuff like this in decades. But as you said, the main fear right now is inflation and interest rate hikes. The Fed was calling for up to 4 interest rate hikes this year. After what we've seen the past couple of days, now we're saying, no, it's probably going to be 3. That's what the Fed is saying. Who knows if it's going to be 2 very soon. We're going to have to wait and see.
We'll be watching. ABC's Daria Albinger with us here in New York as the Dow Jones Industrial Average falls more than 4%, down 1,000 points, more than 1,000 points. I'm Aaron Katersky. You've been listening to live coverage from ABC News.